the handsome gentleman that you see on the top right-hand corner is Chris Miller, and he's going to be doing this presentation. And if you want to look at my ugly mug, I will turn the... There, you got me now. All right, so here we go with a little bit of humor. Hi, I'm Tom Alston, and I'm going to give you some reasons why you should always pay sales or use tax on the purchase of an aircraft or a vessel. Let's get started. Number one reason, you're a politician and you'd get recalled if you were discovered to not be paying your fair share. Two, you're a private citizen and you believe politicians can do a better job spending the money than you can. Three, the tax is nothing but petty cash to you and you don't want to do the extra paperwork required to legally avoid the tax. Four, your corporation is doing well and you don't want to be attacked by politicians for being a corporate jet owner. Five, you're timid and can't face a tax auditor. That's my job. Let me do it. Six, your wife or girlfriend will nag you for taking a risk. I have a couple of questions for you. Where was she when you took the risk that created the company that created the wealth so you could buy the vessel or the aircraft? If she was complaining about risk then, you've already proved to her that risk is worth it. Seven, you got such a good deal on your aircraft or vessel, you feel like you should share something with the government. I never feel that way. Why do you? 8. Although the Supreme Court of the United States of America has affirmed your right to legally avoid tax, you still think it's illegal. 9. The last time you got audited, you met a great-looking woman that worked for the tax agency, and you want to see her again. Sure, all these are kind of in jest, but if you don't like any of them, you don't want to use any of these reasons, and you want to legally avoid the tax on an aircraft or a vessel purchase, call me first before you buy it. I'm Tom Alston, 916-691-9192, extension 108. The call's free. Thanks for listening. Okay, here we are, and just as a little bit of setup for this. First of all, if you're on this webinar and you have a question, text it immediately. We don't mind being interrupted. Second of all, if you see me drinking out of this little green bottle, it's not Jack Daniels, it's Pure Leaf iced tea, okay, just to dispel the myths. All right, so I want to introduce to you Chris Miller from Shearwater Capital. Chris, take it away.
Thanks, Tom. So I guess before I get started about asset-based financing and the way it's structured and kind of the benefits of it, I'll just tell a little bit about my background. So I've been doing asset-based lending on business jets for a little over 8 years. And prior to that, I've done a series of entrepreneurial stuff, and prior to that, I was a pilot in the Marine Corps. So I've been in and around aviation and kind of emerging markets around the world for most of my career. So given that, I was running an asset-based lending group for a kind of a large financial institution in New York prior to 2014 when I started Shearwater Aero Capital. And Shearwater Aero Capital we're a private finance company that focuses on asset-based lending on business jets, and we do deals all over the world. And our primary focus is it's all about the collateral and the asset. And so we're not terribly concerned about people's financial ability or their credit. It's all based on the asset and our ability to get it back. So I think the last 3 deals that we did were Malaysia, South Africa, and Nigeria. We also do deals in the U.S. as well. So we're pretty open to just about any jurisdiction. So saying that, with an asset-based lender, we really consider ourselves to be experts on business aircraft values. Seeing how that's our only recourse on the loan, we don't have credit information to go after a company if there's ever a shortfall. So it's all about the asset, It's about predicting the residual value and what the aircraft's going to be worth in the future. And then also ensuring that the borrower is taking care of the asset so it depreciates in a manner that we anticipate. So when you're looking at the last 30 plus years of business aviation, a lot has changed. It's emerged. It's emerged and it's matured over the past years, and it's specifically the last 10 years. So if you go back to 1987, if anyone knows what that aircraft is, that is a 1987 G4 aircraft. So in 1987, when Gulfstream introduced that aircraft, the G4 was kind of the biggest, longest range. So that was like the 1987 version of the G650. That was the one of the best, long-range business aircraft that you can buy, and probably was the only choice at the time. So in 1987, that aircraft, if you were to go to buy it from Gulfstream, would cost about $17.5 million. So, and if you bought that airplane, you flew it, normal utilization, 400 or 500 hours a year, in 2002, that aircraft was still worth, a used aircraft was still worth $17.5 million. And if you look at the depreciation, and here's the depreciation. So you can see the aircraft's about $17.5 million, and you can see in the 90s, the value of the aircraft, it actually increased for a used aircraft, which just doesn't make sense because these are depreciating assets. So what was happening at that time, that in the 90s, the economy started to boom. There was not a lot of, I would say in the 90s, about 80% of all business aircraft were in the US. So it was the value of business aircraft was really focused on the US economy. In the 90s, the US economy really was booming, and they couldn't keep up with supply and demand. They couldn't make enough of these. So you can look at how the rise where, if you were to sell this in 1999, you could have sold it for $23 million and made a profit on it, which is, it's kind of crazy to think about today. Like that's just not going to happen, in the foreseeable future right now. And then I think this tells a story. So you can kind of look at the years, and then you can kind of see, like in the recession, and in 2001, where there was that blip in the internet bubble, the economy took a little bit of a tank for a couple of years, and you can see the value of the aircraft. It kind of decreased. And then the run up in like 2005, 6, 7, 8, again, you can see the value of the aircraft it kind of increased. So you're looking at 21 years later, you bought an asset for $17.5 million, and then 21 years later, you still could have sold that for $15 or $16 million right here. And so what ended up happening after 2008, I think banks, financial institutions really started understanding, and they didn't really start understanding this, I would say, until 2012, 11 or 12 range, where you look at this value, that this G4 now, it decreased rather rapidly over those next 2 years, and then it kind of evened out. Now, granted, it's an older aircraft down here, but what we do is we take the mentality of this kind of baseline depreciation, where you see this gray line right here. So if an aircraft is new here, eventually after 20, 30 years, it's going to get down to this level down here. And, in reality, what should have happened here is this aircraft, the value should have been up and below this baseline depreciation. So when we structure our loans, this is kind of how we approach it. Okay. And I'll get back to this in a second. And then there's some other slides, and I'll kind of show you some historical analysis of around the 2008 timeframe. So when you're looking at business aircraft market, we can kind of define it as three different things. It's cyclical, it's inefficient, and it's regulated. And I'll go through these rather quickly. So it's cyclical, like I mentioned. It's based on the world economy, and you can just take the GDPs of some of the world's countries and wealth trends and stock markets. And the difference over the last 20 years is that in the 90s, where 75 or 80% of all business jets were in the U.S., that's starting to shift a little bit more, where now it's probably just over 50% of the business jets, or at least new deliveries, are in the U.S. And so it's starting to become more kind of a global demand. So it's not 100% correlated as far as the world economic health, but business jet values do follow that to some certain extent. When you talk about inefficiencies, I think this can just be, you can look at the slides, but with inefficiencies, it's really, you just have to take on understanding that valuing business jets is more of an art than a science. And so I'll throw out there that when people tend to, especially financiers and banks, they tend to compare it to commercial aviation. And it's not commercial aviation. Commercial aviation, aircraft, you can value aircraft by using a math problem. I mean, it's supply and demand, but it's more of a science where there's revenue seat miles, there's limited amount of customers, airlines. So if you have a 737 or a single aisle aircraft, a narrow body, that type of aircraft, there are 25 customers throughout the world that will use it. When they're turning their fleets over, what the aircraft is worth as far as the revenue potential for revenue per passenger and the expenses. So you can back into those prices, and it's much more predictable to predict from that side. Now, granted, world economic cycles also affect those. But on business jets, it's more of an art than a science. Now, there is some science to it, but it's about subjectivity of aircraft owners. And so there's a range in there. And having a nice business jet, keeping it maintained properly, and keeping an interior that's kind of standard or normalized is going to really help those residual values and the predictability of it. And then I'll just talk a little bit about regulated is, unlike commercial aviation, one benefit that business aviation has is that our borrowers they don't do the maintenance on the aircraft. So the maintenance has to go to authorized service centers that are independent of the aircraft owners, and it's just much more regulated. And so, when you're looking at records and logs of aircraft, of business aircraft, you really know that the thing's been professionally managed by where the owner brings it. In commercial aviation, the people doing the maintenance on the aircraft is the airline themselves. They do that. So there's no standardization between there is some, but it can vary. If you're buying an airplane, a commercial asset from Delta versus Aeroflot in Russia, I think the maintenance standards of those two are probably not the same. So kind of coming back to the asset-based approach. So when you look at our approach, you look at the asset, the aircraft management and security. That's about getting the airplane back, and then the lessee and the credit. So we focus primarily first on the asset. Okay. So we want to know that we're selecting the right asset, and the advance rates and the amortization schedules that we're going to do are based on the asset itself. Some of it's based on the region of where the aircraft is, but it's primarily based on the asset. And when you look at a credit-based lending solution, this is just flipped upside down. So where you would have the asset would be at the bottom, and the credit of the lessee would be at the top. That's where they start. And so our priority is the asset, is the aircraft management company, and security of the aircraft. So when I say aircraft management company, typically we will make our borrowers have an independent aircraft management company to manage that aircraft, and then we'll enter into what's called a snatchback agreement or a tripartite agreement, to the point where if we ever tell the management company that there's been a default by the lessee, then they'll look to us as the owner, and they'll get the aircraft back to where we tell them to bring it. And also that aircraft management will be the CAMO, or the continuous airworthy management maintenance oversight. Well, they'll maintain the records and logbooks, and they will ensure that the aircraft is getting maintained properly to authorized service centers. So that's a critical component for us, because that enables us to make two things. One, if there's ever a default, we're going to get the aircraft back in a timely manner. And two, when we do get it back, the aircraft will have been properly maintained so that we can liquidate it or resell it. And then, of course, we'll look at the credit of the lessee. And a lot of time, when I say the credit of the lessee, we'll look at the lessee. And for a lot of times with our asset-based lending, we're not really looking for any financial information. If the client wants to provide it, that's great. But it's not going to affect the rate, and it's not going to really affect the amortization. It's just nice to know. But it's all, it's more like KYC and the OFAC checks that we'll do on just to know who our customer is. And a lot of times, if we're going to say no to a customer based on who they are, a lot of times it's just based on a reputational risk where we just might not want to be associated with certain clients. And typically with our clients, when you find out who they are, you can pretty much put their name in Google, and within 10 minutes you can you can find out if it's someone that you want to be affiliated with or associated with. So when we analyze risk, there's two things that we look at, okay? And there's two things that like a bank will look at, or even a rating agency or a credit agency will look at. There's two things. It's probability of default and probability of dollar loss. So with asset-based lending, the probability of default for us is difficult to predict based on someone's credit information or financial strength, because we're not really asking for that. But the probability of default based on someone having, if we get someone to put 35% of equity down on an airplane, so say they're buying a $10 million airplane, we're going to loan them $6.5 million, but we're going to have them put down $3.5 million, and then we're going to amortize the aircraft faster than the aircraft will depreciate. Their equity will kind of build, and the loan to value will decrease for us. So if there's ever a default, that borrower risks losing their equity or part of their equity. So what ends up happening is before they default, what they'll end up doing is selling the aircraft and paying it off to help preserve their equity. So we're not terribly concerned about the probability of default, because the way that we structure our loans, our asset-based loans, if there is a default, we will make a higher return than the default interest and the penalties that we charge, and that once we get the asset and we sell. So we'll actually come out better if there is a default, as long as that loan to value is preserved.
This is Tom. Let me interrupt you for a second. You have 3 letters at the bottom of these, KYC, and our listeners may not know what that means, so please explain the term.
So that's just know your customer. So
okay,
we're going to go through, those factor into both of them. So know your customer is basically doing your due diligence on the customer. So
thank you.
It's, and banks have websites and stuff you can just go through. It's about anti-money laundering, and it's making sure they're on no lists or do not do business with or terrorist lists. So, and for a lot of times in emerging markets, we'll actually, instead of going through we're not getting credit information, we'll hire independent research firms to do background checks on certain clients, depending on what part of the world and who they are. So, and that's just all part of our KYC. I'll go to the probability of dollar loss. And then, so the probability of dollar loss for us, it's all about the asset and the advance rate and the amortization. So, the way that we're trying to structure our asset-based lending is that with the probability of actual dollar loss, if the client defaults and you're going to lose money based on the asset, I wouldn't want to say it's de minimis, but it's mitigated several different ways. So, and that's where we really focus our effort and time on.
Thank you.
So kind of going to, talking about business aircraft lenders, and I'll just kind of touch on this, but this is just the kind of spectrum of type of lenders here. And this changes from time to time, and this is not a perfect thing, but in general, at the top you have banks, okay? Banks are looking for the top tier credits, primarily in kind of, mature markets like Europe or North America. And their rates, are really low. So in the U.S., banks are competing for the best credits. So, their rates can be, 2% interest rate. So they're at the, the lower end of it. And the advance rates can be up to 100%. Maybe not so much now, but, back before 2008, it was certainly 100%. But based on the credit, it becomes more of a credit deal than an aircraft deal. So some banks are still doing, 100% loans or leases, loans on business jets. And then kind of next in there, you have financial institutions, equipment leasing companies. It's the same thing. A lot of times their money will be coming from, institutional money, with regulated money, whether it's insurance companies or pension funds. And, their rates are going to kind of be up a little bit, 300-400 bips more in that 5 to 6% range. They're going to look for some. They're typically focusing kind of on that next tier, that kind of single B, double B, triple B credits, and that's where they're going. So the rates are going to be, proportionally higher, maybe in that 5% or 6% interest range. And these are all just kind of, ballpark figures. These things change all the time. And then you have private banks with wealth managers. So especially here in the U.S., with primarily wealthy individuals, if someone's worth, a couple $100 million, say they'll have a lot of their money with a private bank that will manage their money. And so when they're looking to go buy a private jet, what they'll do is they'll just go to that private bank, which is, some of them are like Citi or Credit Suisse, JP Morgan, and they'll go and they'll get very favorable terms for them, better than a bank would charge to a non-private wealth client. And what they'll do is they'll kind of collateralize it to some extent. Every bank is different, to some extent, with the assets under management. So I don't want to get into too much in that, but it's just another way banks can control those best credits. And then you have private equity and hedge funds, and that's primarily kind of where Shearwater, where we fall into. And these are the rates for these can be anywhere between 8 and 15%, depending on the deals. And so these are going to be a lot more kind of asset-based, kind of the deals that none of the above are going to want to do. And for that, we're going to have, the advance is going to be a little bit lower, and the rates are going to be a little bit higher. So it's all about risk adjusted.
Chris, I have a question.
Sure.
Why is the private equity asset-based rate so much higher than a bank rate or a financial institution rate?
It's because they're willing to take on more risk for a higher rate. So it's risk adjusted. So like there's a void. So like banks and these credit-based lenders, they're not going to do asset-based lending on business jets. They're just not set up to do that. They need credit information. They're credit lenders. So when you go, even in the U.S. but when you get out of North America and outside of mature markets, if you're a client or a company looking for money to buy a private jet and you don't have the credit worthiness to go to a bank, we have clients. We have clients in these emerging markets that say they'll have equity interests in, say, 20 different privately held companies. These people will be worth $500 million to $1 billion, but they don't have like their wealth is spread into so many different types of companies. None of them have audited financials. They're very private, so they're not really, they can't present a credit profile to a bank that would ever get them to lend money. So their choices are asset-based lending or these private equity or hedge funds that are looking for a much higher return. And for that, in exchange for that, they're taking on a more perceived risk. So going back to the analysis of business aircraft and the values. So you're looking at here is we're looking at a G550, and so you're looking at kind of the run up into 2008 here. And so you can kind of see where the value is here, and that 2006, 7, 8, the value actually kind of increased up to 2008. And then there was basically a crash here in 2008, like we all said. And then the aircraft kind of leveled off for a couple of years. The market didn't really know what was going on. And then it kind of developed into a more predictable kind of depreciation. And it's the same thing here for the 604 and 605. Slightly different, but same type of trend. So the takeaway from this slide is that I want to bring to you is that during the 3 quarters, like in 2008 during that crash, in 3 quarters, that G550 and the 605 Hawker, and I'm going to show some other slides here, they depreciate on average of anywhere between 30 to 38% over 3 quarters. That's less than a year. And you can see in the graph right here, quarter by quarter, Q4 2008. Like in 1 quarter, that G550 depreciated 9%, the next quarter 12, the next 18, and it was quite a correction. So it was quite an aggressive correction that happened over a very short period of time. So, and I wrote an article about kind of what to look out for the are we heading for a next correction? So I think the lessons learned from that 2008 correction according to business jet values are to look at a couple of predictors. And one of the predictors is the year-over-year price increase that the manufacturers are charging for their new aircraft. And when you look at like the G550, when the used values were increasing like that, so Gulfstream and Bombardier were the same thing, the year-over-year price increases was anywhere between 8 and 15%. So 1 year a G550 brand new would cost $50 million, and then the next year it's costing $54 or $55 million. It's just, and the rate of inflation was probably around 2.7, and the cost of the materials to make the aircraft didn't go 8 or 10, is basically a supply and demand. So the manufacturers were just, they were trying to get more, they were just trying to get as much money for their aircraft as they can. And so what that ended up doing was, and then also there was backlogs in the order books of these manufacturers. So if you wanted a brand new business jet, a brand new G550 or a 450 or a Global Express, you very well had to wait, 12 to 24 months to get it. You couldn't just go buy one. You had to order it and wait in line. And so what that does is it increases the value of the used aircraft, where you could go buy a used aircraft today. You don't need to wait 2 years. And so it creates this kind of false demand, and we saw that rise in prices in 2006, 7, 8. Now there's some other factors in there too, but when we're looking at today, we don't really see those factors, and new aircraft are depreciating kind of where we think they should. And now, because the order books have all kind of settled out, the manufacturers are much more disciplined about their maintenance lines, and to speed up and slow down a production facility of these larger mid-size and larger aircrafts, it's like a freight train. It takes a couple years to slow it down, and it takes a couple years to speed it up. So I think all the manufacturers have gotten much more disciplined about not speeding up their production lines when it's perceived that the markets are good, because when the values tank, they can't slow that production line in, because to build a G550, I think there's like 180 different parts suppliers. So like you can't just turn the faucet off and stop. It's going to take a while, and that's how these manufacturers have whitetails. And then that's when the values of those aircraft in 2008 and 9, they couldn't slow the production down, and the whitetails were there, and the market just started, the values of business just started to crash. So I mean, I feel like I'm confusing a little bit, but there's just so many factors into that kind of go into that whole pricing thing. So when you're looking here, this is the same type of thing. You're looking at the value of prior to the financial crisis, aircraft values appreciated, what we talked about, to values above the original purchase price, and that's just a little it just doesn't make sense. In 2003, a G550 average annual depreciation from 2003 to 2016 was about 7.2%. Okay, and that's this line right here. So that's kind of what you're looking at. And that's not so bad. But when you're looking at that same type of chart for say a G550 that delivered in 2011, where it was 5 years later, it was about 9.3% annual depreciation. So what ends up happening from an asset-based perspective, we believe that aircraft are going to, on a course of 20 or 30 years, depending on where their life cycle is, it's going to be anywhere between 8 and 12% annualized depreciation. And that's where we start with our advance and our amortization. So we're going to assume that 10 or 12% annual depreciation, we're going to amortize our loans a little bit faster. Prior to 2008, banks and lending institution and operating lease companies were figuring out residual values based on 2 or maybe 3% annual depreciation. And from their experience back in the 90s, when we saw that graph with the G4, they thought they were being too aggressive at 2 or 3. They're like, this is never going to happen. You buy a business jet and the value goes up. And so what ends up happening, and you're seeing it now with a lot of the big institutions, here in the U.S., big banks that in 2006, 7, and 8, they were doing, operating leases with residual values on a lot of aircraft on 10-year deals. So those 10-year deals, they're kind of getting them back right now, and they have for the last year or so. And you look at those big institutions, and these aircraft, they're getting, some of these institutions are getting 20, 25 aircraft back a month for deals that they were doing in 07 and 08. And these they're all underwater from the original, residual values based on that 2 or 3%. I think in everyone since 2012 or 13, all these lending institutions and asset-based lenders like Shearwater, those days are gone, and we're never going back to that 2 or 3% depreciation. I think it's the industry standard now is just realizing that it's going to be 10% plus or minus, and you probably should err on the plus side of how these aircraft are going to depreciate. And this is just some more data here. it's a, you take a look at a 2003 603 604 to, like, 2016. It's the average annual depreciation is 9.6. And then, you take a look at the Challenger 605 from 2011 to 2016, and that average annual depreciation is close to 16. Part of that is just kind of pricing, where the pricing was for the aircraft, at that moment in time. But, aircraft are starting to really kind of, the market has matured for business aircraft to the point where I think, these annual depreciations are being a little bit more predictable to be in that 10% range. Let me see, what's the next slide? Okay, and again, this is kind of the same thing that we're talking about here, the financial crisis, and you can see, this is the same slide before, but we're just showing that the Hawker 800 by Vintage and the Global Express. One thing that I like to point out here is, from an aircraft valuation perspective and our asset-based lending, like I said before, we're going to treat every aircraft type a little bit differently. So when you're looking at the Hawker 800 values here, so that's kind of the high end of kind of like a light jet, or the end of a medium jet. So you can see that the appreciation in value leading up to 2008 right here, it really wasn't as great as it was for a larger cabin like the Global Express right here. And so those were not necessarily overvalued, but they took a hit, not as big a hit, and they just kind of, their value kind of centered out here. And I think that we're running into that now with some of the smaller aircraft and also the older aircraft. And I don't want to get too much into this, but if you have $5 million to buy in an aircraft, you could buy a 1996 G4SP, which is a large aircraft. You could buy one of those, or you could buy a brand new light jet, a Honda jet, or you could buy. There's just so many options that you could buy that now that we're in past it wasn't there. And so what that ends up doing in that older, smaller aircraft category, once you get under that $6 million, it's so price driven, and it's essentially a buyer's market down in that price range. So, but every aircraft is a little bit different. But I just thought I'd just point that out. And here's the Hawker. This is the Hawker 900 from 2011 to 2016, and you can kind of see where in that 2012-13 it kind of took some pretty good depreciation, but now it's just kind of flattening out. So it's averaging to be about 15.79. So some aircraft are going to be above that 10% quite a bit, and some are going to be low. But if you were to, I would argue now, if you were going to buy this aircraft going forward from 2017-18 on, it's not going to kind of stay onto that 15% annual depreciation. It's probably going to get more down into that 10 or 12. And again, here's just some more of the same type of graphs here. And I feel like I'm being a dead horse here, but what I'd like to do, and just kind of finish it up and maybe take some questions, is just the way that a privately funded asset-based deal is structured. And it's just it's a lot simpler. It's less regulated than a financial institution. So the way that would happen is that the asset-based lender would essentially create a special, just an LLC or an SPV to be the actual lessor of the aircraft. And for asset-based lending, what we typically do is we do a finance lease. And so a finance lease is really structured, economically like a loan. But from a tax perspective, it is a loan. But unlike a loan and a finance lease, it's a lease. The lessor will have title to the aircraft. And in asset-based lending, having title to the aircraft, it just gives you, one less step. If you ever have to repossess the aircraft, it gives you one less step that you have to do to get the aircraft. So if it was a loan, then you would file your mortgage interest in the aircraft, and then then you would have to go and take title to the aircraft. It just speeds things up a little bit. Where on a finance lease, if there's a default, you're just canceling the lease to the lessee, and you already have title to the aircraft. So on this one, so say it's a $10 million aircraft. So you would ask for 35% down. That's $3.5 million. That comes from the ultimate beneficial owner creates an SPV to be the lessee and the guarantor for the lease. And sometimes the guarantor can be different than the lessee, and sometimes you can have multiple guarantors. and they're going to put in that down payment. That goes to the leasing co, and then the asset-based lender puts in their funding amount, which is 65%, 6.5, and then that money will get transferred to the buyer, and then they take title to the aircraft. One of the things that I would like to talk about is on these asset-based lending, some people call them like no recourse or non-recourse, but what they really are is they're limited recourse. There is some recourse. So I think it's important to talk about the guarantee. So we do need a guarantor for all of our loans. And depending on the things, we typically will do a limited guarantee or a triggering guarantee, as they're called. Some people call them bad boy guarantees. So what we're doing, we're going to get the borrower or the lessee to have a guarantee, but the guarantee will not be for repayment of the loan. They can default and give the airplane back anytime they want, but they are going to guarantee that they're going to take care of the airplane as far as maintenance. They're going to have it properly insured, and they're not going to do anything illegal with the aircraft. It's just covering ourselves, so that if they ever don't comply with those types of things about care and maintenance, or they misrepresented who they were, or any of those things, then that guarantee would trigger into a full guarantee. But if they do everything they're supposed to, and 2 years into the lease, they just can't afford the aircraft anymore, and they just call and say they stop paying and say, come pick it up, then they're going to be off the hook. And as long as they cooperate in giving the airplane back, we will take the asset, we'll sell it, we'll pay ourselves back, default interest, penalty fees, and if there's anything left over, that will go back to the lessee, assuming that they didn't do anything to trigger the guarantee. So it's a much more, it's very different than on a credit-based loan, where from a bank, if you default on a credit-based loan in the aircraft and they get the bank back, they're going to sell it and they're going to come after you for any shortfall. And so on this asset-based lending, if we take the aircraft back and we sell it and we come short, as long as that guarantor gave us the airplane back when we told them to, we're going to suffer that loss. We're not going to have any recourse to go after them unless they did something to trigger that guarantee of not taking care of it. So that's a very big distinction, and I think probably the best one. And so the reason some people, in North America especially, will want these asset-based deals, so because then it's not going to be like on their credit. It's not going to show up as a credit obligation, especially for corporations. Sometimes they like this because it's not going to affect their lending ability. So like we had a client in South Africa who's a high net worth individual, had a profitable company, but they were very leveraged with South African banks because their company was it needed capital, just the type of business that they were in. So they were looking for an asset-based loan that wouldn't affect their ability to borrow money for the core business in South Africa. And so that's one time when our borrowers be looking for that. So and then down here, this is just kind of an overview of what a tripartite agreement would look like. Okay, and so there's three entities. The entities are the lessor, it's the aircraft management company, and it's the lessee. And so there's an aircraft management agreement. We're going to make our lessee enter an aircraft management agreement with an aircraft management company that we approve at our sole discretion. Okay, and we typically have a list of 5 or 6 that we like to use. And if a lessee comes to us and say we'd like to use XYZ, and we'll have to go and do an operational vetting. We'll have to go vet them to make sure that they can be a trusted partner of ours, because that's what they're really going to be. So if the lessor, in the event of a default, then we'll enter into a tripartite snatchback agreement where all 3 of these entities will just agree to say, listen, if the lessor ever tells the management company that there's been a default by the lessee, the aircraft management company is going to look to the lessor as the new owner of the aircraft, and they're going to take the airplane and deliver it with this records and logs wherever we tell them to. Okay, so and that's a critical component to what we do. Sometimes if it's in the U.S. and it's a charter operator that's going to have to manage the airplane themselves, excuse me, we will entertain allowing our lessee to manage the company, but the country's got to have very good self-help laws where we can go get the airplane back. So with saying that, I was kind of a lot of information I felt like going through, but if Tom, if you have any questions or anyone else has questions, I'd be happy to take them.
Well, as I said in the beginning to those people that are on, especially those that I know, Robert and Randy and Ron, uh, we invite your questions. The downside is, and this is actually a compliment to you, Chris, is you did such a great job of explaining everything and anticipating our questions that I didn't have very many, and I knew nothing about what you were talking about to start with. So I want to congratulate you on the quality and the thoroughness of your presentation. Um, and you know, we're going to laugh. I'm at a loss for words. I don't know what to ask you because I now have not a complete, but a better understanding of what you mean by asset-based financing. I think I understand what your market is. I think I understand how it works. And I truly appreciate you taking the time to enlighten everybody who was smart enough to get on this webinar. And I think you did a great job.
All right. Well, thank you.
Okay, so if there are no questions, then again, I invite you to send in questions. I'm going to give them about 30 more seconds. And you know, you did a great job. I don't know what else to say.
So do you want to invest in one of our other deals? We can get you a pretty good return on your money.
You couldn't be asking me that. You haven't seen my bank account. Yeah, yeah. Funny thing. The only thing I'm investing in right now is multifamily housing units throughout the South, primarily.
Yeah.
I work with a company called Cardone Capital out of Florida. Have you heard of them?
No, but there's a lot of similarities between, like, you know, hard money lenders and in real estate, like asset-based real estate. It's a lot of similarities. I know a lot of guys in the U.S. that do, you know, asset-based loans on strip malls and stuff, and sometimes they're getting higher returns than I am for doing deals with people in Nigeria. You know, the guy in Florida needs money on a strip mall, but it's a cash flow thing for them.
Yeah, absolutely the holy grail is cash flow.
Let these asset-based lenders in real estate, I thought I was kind of a shark. These guys are ruthless with what they charge because they know what someone's cash flow, and but they're offering them a solution where they're just leveraging themselves against an asset, and it tends to work out for them. So it's interesting. There's a lot of similarities.
Thank you.
Looks like I got a question from someone asking if you only handle clients in California.
So Shay just sent me a question from someone that wanted to know if we only handled clients in California. The answer to that was yes until the end of 2017. Now we have a program called Verify where we collect from anyone who is filing a U.S. tax return, so it tends to be all N-registered aircraft being used in business aviation. We collect their flight logs, their fuel receipts, their maintenance records, and all of their business support, because the IRS requires that if on an annualized basis, more than half of their flight hours every year be used in business. And so what we do is we collect all that stuff, we quality control it, we make sure there's no errors in anything. And I can tell you from personal experience and looking at aircraft logs and fuel receipts that about 75 to 80% of the time there's some kind of mathematical error in terms of how they add up all that time. So it's what made me realize that this is a good service for people. We charge almost nothing. I will say almost. We charge $225 an hour to review those logs, fuel receipts, maintenance receipts, and business support. And in general, we can do that in 1 to 2 hours a month. We store those records electronically for the clients, and then we make them available to their CPAs or their accounting people whenever they need them. Primarily, they're going to need them to file their tax returns. So, and that is available to anyone. And a secondary thing that makes it available to anyone, even if you're not a US-based aircraft, is that we are storing in the cloud or on our servers copies of all of your aircraft logs and the documentation that you need when it comes time to say, prove to your lender that you're taking care of the aircraft, or when it comes time to sell, there's no missing gaps of any of your logs. And I'm sure that kind of stuff is important to a guy like Chris because he knows someone is overseeing what you're doing. So, and we store those and we make them available to anybody who's in the chain where they need all that stuff. So, whoever asked that great question, your $10 and a free Starbucks coffee card will come tomorrow. Chris, I think we're done unless there's anything else that you feel like that should be brought up that we will bring up. And I will all tell all of you that are on this webinar that a permanent copy of this webinar will be on our website, and you'll have a link to it so you can watch it 35 times, and then you'll be almost as smart as Chris.
It's not a very high bar.
There you go. All right, so I am going to end this event. Thank you, Chris Miller, and thank you for the participants who are on, and I hope that you found it as beneficial for you as I found it for me.
Thanks, Tom.
Bye.